the fact that Bitcoin is engineered so that it does change value. Someone is doing something. That's actually what creates all the volatility. But let me make one more point. Do you know the call rate? If you hold $1 or hold $1 million and you're wanting to hold it for 30 days, you're getting SOFR, the 30-day SOFR rate. You're getting about 4.8% interest. If you actually hold $1 million of the S&P index and you sell the call 30 days out at the market, you're getting like 15% interest. If you're holding $1 million of Bitcoin, IBIT, and you sell the 30-day call, you're getting 100% interest.
Volatility is often misunderstood, but in the world of Bitcoin, it's not a flaw, it's a feature. Unlike traditional assets that offer predictable returns, Bitcoin's price fluctuations unlock unique opportunities for growth and wealth creation. As Michael Saylor explains, Bitcoin's volatility is a dynamic characteristic that holds immense potential for those who know how to harness it effectively. In traditional finance, bonds might yield 5% annually, and well-performing stock portfolios may offer returns of 10–15%. While stable, these figures are limited by centralized systems and institutional oversight. Bitcoin operates beyond these constraints, thriving in a global 24/7 market fueled by innovation and scarcity. Its price swings, often perceived as risky, become a powerful asset for strategic investors seeking exponential growth far beyond the capabilities of traditional markets. Bitcoin's decentralized architecture and finite supply challenge conventional financial norms, offering an alternative for those ready to embrace calculated risk. It's not just a speculative asset but a financial revolution, redefining wealth creation in an era of digital transformation. For those willing to adapt, Bitcoin provides unprecedented opportunities to thrive in a system driven by disruption and innovation.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
I think in the middle of 2000, in the summer of 2000, what drew us to Bitcoin was desperation and frustration. So initially we had $500 million in cash. It was worthless, like it was generating 0% interest. The company wasn't growing. We were under lockdowns, competing against Microsoft. So, you know, the only thing that we had in our world that was a bright spot was we had $500 million in cash and we thought maybe it was worth something. But when Jerome Powell said it's worthless for the next 4 years, we lost that, you know. So we had to do something. Our initial foray into Bitcoin was defensive, or it's just frustration, defense. It's either that or sell the company. So if you're not going to sell the company, you can die slowly, you can die quickly, or you can do a transformational acquisition. You can take a risk, and that was our transformational acquisition. What if you could buy a $500 million company growing 60% a year, which looks like its own digital monopoly, and you could bolt it on to a company that's growing not, 0 to 5% a year, that's not a monopoly. So we did that. Then Bitcoin surged, and we could opportunistically raise money via the convertible bond market. And we raised $650 million at 75 basis points. And then we raised $1 billion paying 0% coupon. And that point, I would say that stage is opportunistic. Like someone wants to give you billions of dollars of free money to actually invest in your business. Why wouldn't you? We got on the roller coaster. It went up and down. It surged, it crashed, it surged, it crashed. And I think by the beginning of 2024, it became strategic. And we realized like, hey, we're just doing this because we've got an operating company and we can do it. And between 2021 and 2024, we raised about $10 billion of capital. So we started with $500 million. We raised another $9.5 to $10 billion more. And now the question is, well, what's going to happen with crypto and what's going to happen with Bitcoin? And you got the ETFs approved in January. I mean, 2024 is like year zero of institutional adoption. So the ETFs are approved in January. Everybody wrote us off and said, well, MicroStrategy is unnecessary now. What they didn't realize is the ETFs are like overnight deposits. Like you put money into BlackRock, but you can take it out of BlackRock the next day. MicroStrategy, that $40 billion, That's our money. That's permanent. You can't take it out. We have 40 billion of permanent capital. And so what we realize is our real great strategic franchise here is we can securitize Bitcoin. So I can issue fixed income instruments, bonds, especially bonds and fixed income preferred stocks or high volatility equity. And those are all products the capital market wants. They want Bitcoin-backed securities. They either want 3x to trade, or they want 1/3 of the risk and 1/3 of the volatility to hold in a portfolio. So we announced October 30th that we were going to basically raise 21 billion of equity and debt, and that was well received by our shareholders. We just kind of said we're going to be the leader in the industry. If you want to invest in a company like ours, we're the company. And then a week later, we just had a red sweep, and November 5th was pro-crypto Congress, pro-crypto Senate, pro-crypto White House. Bitcoin surged, our stock surged. And I guess I boil it down to, it took us 4 years to get 10 billion. But by the way, it took me 30 years to get 500 million. It took me 4 years to get the next 10 billion. It took us 4 weeks to raise 13 billion more. And that's because the product you're selling is capital.
Michael Saylor described Bitcoin as a revolutionary asset, likening it to a digital monopoly with unmatched growth potential. He highlighted its role as a transformative force in modern finance, offering both a hedge against inflation and a decentralized alternative to traditional monetary systems. By 2024, Bitcoin's institutional adoption, fueled by ETF approvals and evolving regulations, solidified its status as a cornerstone of the global economy. For MicroStrategy, Bitcoin became the centerpiece of a bold and innovative strategy. The company shifted from traditional assets to becoming a Bitcoin treasury powerhouse, issuing Bitcoin-backed securities, bonds, and equity. Through these efforts, MicroStrategy raised over $10 billion in capital, positioning itself as a leader in financial markets and demonstrating the immense potential of integrating crypto into corporate operations. This forward-thinking approach allowed MicroStrategy to capitalize on Bitcoin's growth while redefining how businesses adopt and leverage cryptocurrency. Let's dive back into the interview to explore more insights and key moments.
So imagine I could borrow $1 billion, build a digital building in 5 days, announce that I made money on it, and borrow another $1 billion. I can do that every week. And that's exactly what's happening in this market. We're basically accelerating the investment cycle from 5 years to 1 week. Bitcoin is the unique radical actor here because Bitcoin is the first product that's a commodity. That's a legal definition, an asset without an issuer. And it's economically a scarcity. That is a common sense definition. It's a commodity that you can only make 21 million of for the next 1 billion years. So there is no legal commodity that's also a scarcity other than Bitcoin. And if you don't have a commodity that's a scarcity, you can't do this with 100% of your capital in a public company. Yeah, like you can't do this with a security. Like I couldn't do this trade with NVIDIA stock. Even though it's a great company, NVIDIA stock is a security. So I could never own 100% of my liquid capital or have it invested in NVIDIA. So if you wanted to do this before Bitcoin, you had to do it with gold, soybeans, oil, or real estate. And they all underperform the S&P, and they all have less vol in the S&P. So if your hurdle rate is 15-15 and you're showing me real estate, which is 10-10, the trade doesn't work. And so what we're doing is totally rational and simple. It's the simplest thing imaginable if you accept the premise that Bitcoin is a real asset, that it is a commodity, and then it's 21 million, right? And once you get that idea, everything else follows naturally. And until you get that idea, you just think it's crazy magic. The performance of the underlying asset is such that the bonds never get paid back other than they get equitized. And if you look at my situation right now, I have about $40 billion of Bitcoin. I have about $7 billion of bonds. 4.2 of them are already equity. I mean, they're already effectively equity because they're trading not just above the strike price, they're trading above the call price, which is 130% of the strike price. So we could generally sometime in the future, just call them all for equity and equitize them all. So there's about $3 billion of a convertible bond on a $40 billion structure, which is zero coupon, which there's some theoretical risk that there might be more dilutive than the minimum strike. But the other point to make is these are no recourse unsecured notes. There's no lien, there's no claim, there's no EBITDA covenants. I think we paid like 30 to 35 million in interest on 7 billion in debt, Scott, a year. But I don't even have to generate the cash flow for the 30 million. I could actually sell equity in order to pay the 30 million, and we have raised 10.5. We've been generating $1 billion of equity a week. I mean, $1 billion of income and equity a week. So the real magic of this is you need an asset which is going to outperform the S&P, that's also going to stay more volatile than the S&P. And then you need a company, a public company that's 100% Bitcoin. And when you sell securities backed by Bitcoin, you need to buy the Bitcoin with it. And because you're actually feeding back the capital back into the system, it's like a triple amplifier, because it's driving up your assets, it's driving up your volatility, and it's driving up the price of Bitcoin.
Bitcoin's market activity is expected to grow increasingly unstable, posing challenges for bulls seeking gains. According to CryptoQuant analysis, the 14-day choppiness index has entered a high zone, signaling corrective moves during consolidation. This indicates that Bitcoin's price may decline following its recent flash volatility. The choppiness index, which ranges from 0 to 100, measures market stability. Higher values suggest choppier conditions, while lower values indicate trending markets. Currently, the index stands at 56.7, suggesting heightened price swings and urging traders to exercise caution. Historical data shows that longer consolidation periods often lead to more dramatic returns to trend. However, in the medium term, Bitcoin bulls may face delays in price discovery. CryptoQuant's analysis highlights the influence of market psychology and speculative trading. Short-term profit milestones are expected around $110,000 and $120,000, corresponding to standard deviations in realized price indices. These levels are anticipated to create significant resistance, with $120,000 carrying substantial psychological weight and likely becoming a key consolidation zone. The realized price of short-term holders, defined as the price at which they purchase their coins, is a critical metric for gauging market sentiment. It suggests that $110,000 and $120,000 are pivotal support and resistance levels, likely to attract significant trading activity and increase volatility. As Bitcoin navigates these dynamics, traders must stay vigilant. What are your thoughts on these predictions? Share your insights in the comments below. For more Daily Dose Crypto News, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.